Although we're at the beginning of the calendar year, we're actually at the end of the tax year, because the tax year ends on the 5th of April. So it's worth looking at whether there's any actions you should do before the end of the tax year. And in addition to that, there is one tax change that is sort of not that well known, not that much talked about, that I want to go through, because if it affects you, it affects you a lot, but it doesn't affect all that many people. It's one of those things, which is why it's not talked about so much. And this year is important because not only do we have the end of the tax year, but in the new tax year we're going to have an election, and maybe we'll have a change of government. So it's worth just thinking about if there's anything you want to do for the change of government as well as for the end of the tax year. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel, and if you press the like button, it helps me and the channel, so thank you for doing that. So the end of the tax year is upon us, with just a couple of months to go before it ends. So first of all, I think it's worth just looking at allowances. Now, I think the first thing I want to think about is pensions, because pensions is a big tax benefit and is a very hard cut-off at the end of the tax year. And there has been a big change. So there were two changes. The amount that you can put into your pension each year has gone up from 40,000 to 60,000. So if generally you have been putting, a high earner who've been putting £40,000 a year in, you might want to think if you want to top that up, whereas in previous years you sort of thought about that and thought, no, can't top it up. This year you might want to, so that could be important. And the other side of it is they got rid of the lifetime allowance. That means that people who were sort of up to the £1 million in their pensions maybe didn't want to put money into their pensions because they'd have breached the lifetime allowance, although they had room on the annual allowance. So the getting rid of the lifetime allowance means that people can put money into their pensions, so it's a change. You might want to put money into your pensions when previously you've thought it through and you didn't want to put money into your pensions. So I think that's important. And just while we're talking about pensions, don't forget that they've now frozen the tax-free lump sum, so that is going to wither away with inflation. So if you're young, then the tax-free lump sum is going to be worth very much less by the time you come to retire. I'm sorry about that, but that is the way. So there are other allowances that you might think about. There's the ISA allowance, so you can put £20,000 into an ISA. Some people are on lifetime ISAs. There's the capital gains tax allowance. So the capital gains tax allowance was set at 12,300. It's now set at 6,000 this year, and that's 6,000 each for a couple, and it going down to 3,000 next year. But you might want to, if you've got some gains, you might want to just make sure you've used that allowance. If you've got some gains, you want to sell something between now and the end of the year. And it's worth also thinking this is relevant to a change of government, because the capital gains tax, I don't know whether Labour will increase them or not. I would imagine so. It's a capital tax, but you never know. But either way, if you have gains that you want to make, the rates of tax on capital gains are, well, as low as I've known them. So I feel that the only way is up with those. And then we get to slightly more exotic things like EIS and venture capital trusts, which can save you income tax, but very much your capital is at stake with these things, because the very good tax allowances come with an awful lot of risk. But for wealthy people, that might be something that you want to take advantage of. So now let's move on to the tax change. If you are a sole trader or a partnership and your year end is not the 31st of March, or somewhere between 31st of March and 5th of April, i.e. at the end of the tax year, you've got a different year end to that. A lot of partnerships used to have the 30th of April as a tax year end date, accounting year ending date. Some people have the end of December, but you could have any year end. Now the rules have changed on this, so it's very much, to stop you getting confused, it's very much something that you might want to think about, is having a end of tax year end for your financial accounts. And if you do not have a 31st of March to the 5th of April year end, and you're a sole trader or partnership, I really would recommend that you seek advice, because the rules changed and they're a little bit difficult to explain. I'll probably do a video on it at another time, but they are important They're very important, but to a relatively small number of people. So the end of the tax year is upon us. It's always good to review how you're going to be taxed. There are some allowances that end when the tax year ends, so you might want to think about that. You might want to think about what tax you, if there's anything you can do to mitigate your tax between now and the end of the tax year. And within that mix, you might just want to consider whether there's anything you want to do now to take advantage of things as they are taxed now, just in case things change with a change of government. If you'd like to like the video, it really helps me and the channel, and if you subscribe, you'll be kept up to date with future videos. Thank you.